To the Retirement Report, I'm Hank Parrott, your host, and with me my good friend, special guest, Dr. Friday with Dr. Friday's tax and financial firm over in Brentwood, Tennessee. Dr. Friday, by the way, is an enrolled agent, and so not only I don't run into this part, fortunately. Most of my clients are, they've been good savers. Tax problems aren't the issue, other than they typically pay too much in tax simply from not knowing the rules or not employing certain strategies that can be employed. And that's why when we, when I first meet with someone with new clients, first thing we do is we dive into this part of it as a part of the overall financial plan. Right. We're looking at how we can minimize taxes. So all my clients now, that's one of the things we're doing, is we're implementing strategies for each and every one of them in terms of minimizing taxes. And then I meet with them at tax time when they're meeting with, and many of them with Dr. Friday, most of them I'd say, in fact, we probably have about 80 clients that I think she does taxes for. And so I'll meet at with them at that meeting. So when they go see Dr. Friday to get their taxes done in the spring, we'll set aside typically about, I think, 4 or 5 days out of that tax time just for my clients, and then I'll be there for all day with appointment after appointment. Just I know these are long days. These are long days, but we want to make sure it's an opportunity for tax planning. It's an opportunity to make sure that no errors are made with regard to tax forms and stuff.
Cost basis, 1099-Rs being mislabeled. He is, and I can't imagine now actually doing his clients almost without him normally being there, because I think every single day, at least once or twice, you're on the phone resolving an issue for me so we can actually finish it, where a lot of times the client isn't really sure who to go to. I mean, they're, well, we sold some stock, but they didn't know the basis because it's not on the form, all that kind of stuff. And you are very helpful.
We don't leave those things hanging. Those are things that we follow up on and make sure, and we get the tax forms. And sometimes, each year there's tax forms have errors. That's not unusual.
But we fix them before the IRS gets it.
Exactly.
And that is a huge step. If you wait for the IRS to fix it for you, I mean, we know, I've got clients every day. I mean, it can take 6 months to a year for them to get on the same page as we are. Meanwhile, you're getting a lot of love letters and things saying you owe money, there's penalties, assessing interest, etc. So it's going to be stressful. And
it's it. So even though we don't run into tax issues that an enrolled agent's necessarily going to deal with the IRS, if you do have that kind of issue, if you've got, and for small business owners, this is one of the areas, especially with payroll and other things they have to deal with. If you've run afoul of the IRS and you need some help with that, Dr. Friday can help you with that as well. So you can contact my office. We can get you in touch with her and make sure that you get the help you need. You can give her a call at 615-367-0819. How's that?
I'm impressed.
I know. Don't even have to look it up. 615-367-0819. You can tell it's the number I dial quite often. Okay, we're going to get back into the program here with this tax part. So on number 2, if you don't already, you're likely going to start taking the new standard deduction. And we were talking about that. Look at this stat. 90% of taxpayers are expected to take the higher standard deduction, up from 68%. In other words, more people not having to itemize because they're getting more of a tax break by not itemizing. Most but not all are expected to be better off, excuse me. So this goes to, for instance, according to Kiplinger's, 38 million of the 45 million taxpayers in the country would be better off with the higher standard deduction rather than itemizing. And also understanding, again, as we had talked about, Dr. Friday, for those over age 65, they get an extra deduction, correct?
Right. They get, if you're married, you get $1,300 for each person. If you're single, $1,650 added to whatever the standard deduction, which is $24,400 next year. So yes, that will give them an advantage. And we're going to hit the next part. The people that did not benefit will be families, larger families, families with more than 2 children.
So this is an area, and when it comes to the new standard deduction amounts, there it is again on your screen, 12.2 for singles, 24.4 up, and you can see it's basically about doubled with regard to that. The new tax eliminates, though, the personal exemption of $4,050, and that's again with this large, as Friday was saying, with the large Friday.
Either largely families or people that did have large amounts of itemizing, myself included. Theoretically, it was 12.2 for a single person. I always itemized above that, so I lost the personal exemption of $4,050 on mine. So it was a step down, not a step up, but I still found with the percentages of the reduced income taxes, it was still a much better and cleaner way of doing it.
And that's the other part with the if you're not benefiting necessarily from the standard deduction versus itemized, you're going to have those lower tax brackets are going to help you. And that, as I mentioned earlier, that 15 to 12 going from 15 to 12 is a 20% reduction in your taxes in that range. So, again, that's going to, for most people, in what I keep running into with my clients when we're actually running taxes, is they're paying less tax than they would under the old law.
That's it.
And then it goes into an example. We're going to skip that one. So how can you itemize deductions now that the personal exemption is eliminated in the standard? So we talked a little bit about the odd even as one way to do that. And if we look at number 3, this is another, alternative minimum tax. This is probably one of the most sneaky little shadowy government things ever. And if you've ever gotten burned by the alternate, you're thinking, oh, good, look at my taxes are lower. And then you get this shadow tax that no one understands.
Well,
but
it kind of
basically
came back in the 70s where they were trying to put a level playing field for people that were doing a lot of money through interest, dividends, stock change. And so they were saying, hey, the wealthy, theoretically, were paying a lot less in tax than the working person. So what we're going to do is we're going to start taxing those people as low as $45,000 or more could get what's called an AMT, or alternative minimum tax, tagged on, putting them in the 24% tax bracket. So it popped them right up out of maybe a 12 or 10% bracket up into that for some of those earnings.
Right.
That was the theory, but as usual, that hasn't changed in 20 plus years. So that same 24%, same income bracket basically hasn't had any inflation. So now the number of people that back in the 70s, 45,000 was quite a big income. In the 2010s, 20s, whatever you want to say we're in, that is not necessarily a high income bracket.
Yeah, this is the trouble with, it's the same with Social Security when they set these exemption amounts, saying, well, if you make this amount of money, you're exempt from paying this tax, and that's kind of what the AMT was about. But the problem is if you don't change that exemption and our income, especially when you're talking about decades, over 30 or 40 or 50 years, then imagine what $50,000 a year was, let's say 40 years ago compared to today.
Right.
All right, so a huge difference. And how many people were making 40 years ago made 50,000 compared to how that's the median income today. All right, so that's the kind of thing, and if the tax law doesn't change, and that's what's happening with the new tax law.
The new tax law brought it up to a little bit of higher, and I thought this article, I'm going to jump ahead on Hank here, but according to the Tax Foundation, 10,300,000 households were subjected in 2015 to AMT tax. Again, back in those days, it was apparently, in 2017, it was 54 for a single person and 84 for a married, so that was considered middle class,
right?
At that time. They have brought it up now, and it'll affect more people in the 200 to 500 bracket, which was what the purpose of the AMT tax was initially designed, to level the playing field for theoretically
for people
the wealthy
that were able to take a lot of deductions or do other strategies to reduce
eliminate
their
some
taxes.
of the itemizing, because again, itemizing has also changed a lot for those individuals. So it's going to be a little better.
All right.
We'll see.
We're going to take another break. When we come back, we'll dive back in, try to get you, some more strategies here. As you can see, there's a lot to uncover with this, and we're going to do it again. We want to do a series on this one because, again, this is a great time of year to still be, while there's still time in the year, to implement some strategies that could help you not only reduce your taxes for 2019, but position you for less taxes in future years as well. But first, we'll take a break. Join us here. We'll be right back on the Retirement Report.